Good morning, folks. I hope that you are all doing well. It's yet another day, um, which we are yet to see another action in the market. And I just want to recap on where we stopped yesterday. Um, and if you take a look here, you will notice that yesterday we closed the day right around this candle right here, which is that hammer right over there. Um, and today we picked up from that green candle. But one interesting thing though, like I normally tell you in my all of my videos, I normally use the open range breakout. And if you take a look at today's open range distance, the distance between the closing price and I mean the closing and the opening of the first candle is quite really wide or far apart, which indicates a weaker action or a weak momentum in terms of volatility or increase. Just I mean, it just indicates low volatility. Um, as to me, that's how I interpret it. Normally, you can interpret it in any whichever other way you want. So we have that first candle open, and then the next one followed by another hammer, of which that hammer, if you take a look at it, it's what I'm referring to is this. Only if I could draw my candle the right way. That would be simple and easy. But yeah, really what I'm referring to is this candle right here, which is very skinny from the bottom and a little bit huge from the top. So we have that hammer showing up. But remember, this is a 30 minutes chart which we're looking at, and that just indicates a lot of pullback which is going to happen following that. So we did have that go up to the major support level from the previous weeks, um, and that support level, of course, was broken yesterday heavily. But now this support level, from what we know, is going to probably or will be acting as our level of resistance. So that's going to be our resistance level moving forward. So we have our open range breakout right now, right here, and we have that level of resistance up there, which is still being respected actually. With that also in mind, the level where we stopped yesterday, this right around here, this might be yet another level of support for today. And so if you're trading the day today, what I would do though is that I would actually wait for price oscillating between these two right here, which means this would be my support, which is where the day closed yesterday, and also the daily low. So between that daily low and daily high, we do have a resistance level, strong resistance level at the daily high, and we do have a weak support level at the daily low. I don't know what that refers to on the far right, if it you know touches any other level. But yeah, we do see that that level is corresponding to this key level here, which was a gap, a runaway gap. There was nothing in the middle there, so this is a runaway gap which corresponds to another runaway gap. There has been a lot of gapping in this section here in this region, if you have paid attention to this. So we are at the gapping zone here. Everything has been just gapping around. So there's been a lot of. So this is another support. Actually, this is a major area. Actually, if I don't know what this was for, but I do believe what I was trying to point out here was that this is a major consolidation zone here, which is a no trading zone. But that aside, so yeah, where we are at the moment is actually a stronger support level, and this support level might still hold for a little bit of time. But if we do happen to break this support level, we should see a pressure here. We should see a little bit of a selling pressure here. So yeah, we do have these zones. We Yeah, like I said, we have those runaway gaps happening here and there. We do have that, which was as well at this point that I'm just leveling or marking, that had been a support level in the past. but in today's it's acting as yeah it's still acting actually as a resistance on the downtrend. But yeah, we do have this level, so that kind of rings a bell. Actually, that rings a little bit of a bell. It is either we will break that to the downside, of which if we break that, that will take us to this key level here. Okay, that will take us to this key level here, but we don't want to go that far down to that key level yet. And of course, to get to that key level, actually, let me mark it green, maybe, or something. The green zone here might would be our next target if we break below today's daily low. If we break and close below the daily low, we'll see some action taking place there. So basically, yeah, that's what I would expect here in the market. In within, I would expect some consolidation around here. That consolidation, I don't know how long it will last, but we do have that zone up there being respected. But the zone up here is actually, yeah. Let me see here. If I project this a little bit further, yeah, it's sort of a strong zone, but not that strong. So anyhow, let me get back to you. All right, folks, I'm back. Anyhow, I was saying, according to what we have so far, we do have a strong level up there where we are currently oscillating between. So that is also another strong level, but it's not. I think it's not as strong as our current resistance level here. On the downside here. So with that in mind, we probably want to watch a breakout to that upside actually, which might happen. I don't know how often. I mean, not just often, but I don't know how soon that will happen. There might be a little bit of a delay here and there. So if I was to trade actually this sideways of the day, basically I would time, if I'm to give you a quick rundown. Let me zoom this out a little bit more clear, so you can see it. If I was to trade this day, but definitely what I would do would be something like this. I would set my exit, or take profit zone right around here. Let's call it that green. If I'm trading, if I decided to enter short, or if I had decided to buy puts up there. Also, vice versa, I would wait. I would and that. Let me paint that actually. What color is it? Tell me what color. You guessed it right. Okay, on that yellow or orange spot over there, what I would do if I decided to buy calls here, I would wait for it to start rolling back up, and then I would exit before I reach that higher high. Actually, not really higher high, but before I reach the end of that wick, just to give me that room, so that if there is a liquidity run past that, that's the bonus. But otherwise, I would not really care about having to take the whole profit in within the zone up there. You can also trail it with your stop loss, and just keep adjusting it as as it goes. But this would be your target over there. Meanwhile, I'm still strongly believing that this will pull back to this green line here. As far as trading today is concerned, this will pull back to this green zone here, green line here, and then it will pick back from this green line and go back up. Even though we are currently seeing a pullback with the, which is a hammer, we should be able to still see some bit of a pullback, to the downside, and that pullback should pick by another reversal, and that should kick off real quick. If we change this to a 15-minute chart, maybe this will give us a little bit of a clear picture of the day. And Yeah, let's see here. Yeah, the day opened with this candle right here, on this, what line? I decided not to draw it, did I? No, I did not make that decision. On this blue line, the day opened at this blue line, and then we had that. We had all that. We touched that yellow line over there, which was our daily high, and then we bounced off. We did not actually make it back yet to this, to this. Green line here, but on a shorter time frame, we should be able to see some actions, which is happening here. We do see that The red line in the middle here, which is the daily open, that red line at the daily open is actually our resistance level, which means we should be bouncing off from that right around here, right around where we are, if we are to if we are to take this serious. So this should go hug that red line. Once we hug that red line, we should come back for this green line and pick up from this green line. And if you keep watching this close enough, you will see that action really come in here shortly. I'm gonna be a little biased here. I'm gonna change my candles to Aikanashi, just so that I can eliminate some of those false things, entries and exits and all that. So we do have that in Aikanashi. What I would expect to see is that I would expect to see some bit of let's say a wick touching that, just a wick, not the body, just a wick touching that line. We already know where to exit our profit on Aikanashi. On Aikanashi, the tallest wick is right around here. That will be my exit zone, which is still on the yellow line actually. And then on the other hand, my tallest wick on the Aikanashi is actually not really a good one, but it would be right this one here. But instead of using this one, I will show you another alternative. Let me be right back to you guys. All right, I am back. And sorry about that long delay or long wait. Like I was saying, we would come back, have a pullback towards this area which I had labeled with the green, I mean, with the orange cycle, and hug that daily high around that, I mean, daily opening, and bounce off to this zone here. But really, for my entry, I wouldn't use this zone. But that's still okay, because the reason I say that is because this zone is way too wide, way too wide. So what I would do is that I would use the second longest wick, which would be this one here. This would be my zone. So I would use this zone for my entry and exit. So we did have that line, came back and retraced this zone here a little bit. So what we would want to see is that we would want to see some candle which looks like this green one right here. If you're seeing this green candle here, that is just a candle that shows a bounce off. But we want to see a red one, unfortunately. So for a red one, it would be something like this. If you're looking at where my crosshair is, something like this, or the next one, that just means it's a reversal point. So we want to see a red candle of that kind right around here, where we are right now. But there might be some consolidation there, considering how the market was consolidating in the morning here, right around the opening there. So that's a key level of consolidation. I mean, not support and resistance, but there's just a little bit of consolidation there. So we would expect that to happen. But if we do break that, and we should see a little bit of a run. But generally, today on a longer time frame, it's not a great day. Again, I like to use open range breakout, which I'm going to turn it back on. So we're not doing everything manually. I'm going to delete every single thing which we drew here, because I have this already done ahead of time. Um, well, let me keep that zone for a moment. Let me remove this. Let me remove that, and also let me remove this. Let me turn on my indicator here. You will see though that yeah, like I was saying, on a 15-minute chart, the market opens there. We did have that. We did have a breakout here, which that breakout went a little bit up, a little bit on a regular candle here. We had this a massive hammer, which we anticipating we were anticipating a pullback on that hammer, and we did see that, which ultimately had a nicer pullback to this level, or to this zone here, which is where I was pointing out earlier, which would be our entry point. We would get a little bit of a call option here, and just get a few pips on that. So Not really a great run at all. It's very risky. But if you like risky things, that's great. Again, I'll be right back. All right, folks, I'm back, and like I was saying, today has been is not a really great day. As you can see, the open range breakout does tell you a lot that there's not a lot to trade in this market today. Basically, I would try to avoid this everything on this market today, unless if you are really big-headed and you know very you know exactly what you're supposed to do. You can try to scalp this on a shorter time frame. Those of you who like to trade 2 minutes time frame, you actually have a lot of opportunities in there. If you like to trade 2 minutes time frame, it's perfectly okay because you can see how clean things are on a 2 minutes time frame. But of course, remember my chart is a little bit biased, and that means my chart having it on a high Kanashi, it's a little bit different than putting on a regular candle. On a regular candle, you do see though that yeah, on a regular candle, 2 minutes time frame, we broke right off at the beginning of the open range breakout. It was a beautiful break, which of course you would have that if you're trading that 2 minutes time frame, and you would go ahead and put your stop loss below a distance below the previous high. I mean previous low. Sorry, previous low, which means the current opening. I mean current closing here. I mean current opening minus one ATR, which is minus 3.06. We open around 555.07. We would put our stop loss at right around uh, 50, 53, actually 54. But 54 is, I mean, 55.04 is just the previous day low, actually. So we want to go a little bit, give ourselves a little bit of room. So I would definitely do a 55.02 there, or just 55.49, you know, just so that we're not being swept off right away if there's any sudden reversal. So with that in mind, yeah, I would definitely on a 2 minute time frame. It looks beautiful. It looks nice. Just that longer time frame, if you like to see things on a bigger picture, like trade longer time frames, this wouldn't have worked well for you at all. Um, and again, today, just keep your eyes out. The next day should not be that bad. Yesterday was horrible. As you can see, the day open today, we had a little bit of a volatility on the on the uh, mini chart. I mean, on my mini sub chart here, we had a volatility spike up to 7.4 on the ATR, but that is cooling down, and that volatility is getting a lot lower. It, as you can see, the lowest we have always had is right around 2.3 or 2 point something like that. Once we see that lower level of volatility, we do know for sure that things are coming down. But everywhere there's a spike in this, we are seeing those aggressive moves takes place, which is what we want to benefit from. Every single one of those spikes have some volume following it, if you can or if you will. So pay attention to pay attention to the day, and pay attention to the chart. Don't make any rush at all, and just keep yourself in the safer zone as we wait for a clear direction. We are at least we are hoping to break through this, or we are hoping to bounce off this. And if you trade with the open ring breakout, you should not be worried at all of what the news says. You should just wait for the news to use that as your catalyst. Meaning, if there's bad news, breakout of open range breakout, use that news for riding the bear. If there's good news, use your open range, break off to the bull, and keep the momentum going. Check in with me later, and let's talk a little more. As you can see, there might still a potential for the bear if you can take a look at the longer time frame. 4 hours, we still see things a little red here, And yeah, let's talk about it later.